Hello, good morning, trade pros. Welcome to our morning market update for Thursday, January 15th of 2018. I hope you had a really exciting time. I hope you had a great Valentine's Day yesterday, not just with the one person you love, but I think Valentine's Day is a great time to spread love to everybody, right? I hope you had some time to just sit back, reflect on what you're gratuitous for, what you appreciate, and other things that you love. But yeah, I hope you had a great evening. I certainly did. It was a great time, and I'm ready to tackle the market this morning. So this morning market update, we're going to talk about a lot. It's a pretty hefty one. I'm going to try to get through it all. We're going to talk about the stocks and how they've bounced back overnight, and as well in last session here that we traded. We're going to talk about Donald Trump's 25-cent tax increase, and also the gun stocks and what happened. First of all, before we move forward and talk about gun stocks as an opportunity for trading, I'm going to say this. What happened last night in Florida, my heart goes out to anyone that's affected by it. This kind of stuff really kind of grabs and pulls at my heartstrings. It's kind of sick what's happening. And I mean, I have an opinion on it. I'll talk a little bit about it, about the whole gun situation. It's not an easy task to handle. All right, at the end of the day, all that matters is that you're safe, and if anyone's affected by it, heart goes out, condolences to anyone who was part of or involved in this stuff. You never want to hear that. It gave me a really sad moment. So anywho, let's carry forward the morning market update. Cisco yesterday came out with really strong guidance and really positive feedback. They're up 6.8% after hours. So Cisco stock is up pre-market on the really strong earnings report last night. The earnings report came out really good. What you want to do with Cisco, if you're planning to trade it or if it affects you in your portfolio, hang on to it if you're long as an investor. As a trader on the open, typically what happens after a gap higher is it'll get faded, it'll sell off, it'll pick up support, and then continue to the upside. So an opportunity to get long would be from a gap. Remember, manage your risk. It's very volatile after an earnings report. All right, markets, let's take a tour around the world. In Japan, markets are up and they closed up 1.5%. Really strong rally out of Japan. Hong Kong's up 2 whole percentage points. That's huge. China's up 0.5%, and India's up 0.4%. So green across the board in the Asian trading session. And we're seeing a little bit of a rebound from these markets from the sell-off the last couple of weeks. Now, I don't think the sell-off is done yet. I still think there's going to be some downside opportunity, but give credit to the bulls. They're really making a strong push to the upside and taking out some stop losses from short sellers. All right, this morning we had initial jobless claims. They came out at 230,000 versus 228,000 expected. All that means is a little bit more people filed, or 2,000 more people filed for unemployment than expected. It's not a positive number. It's not a negative number. It's right in line with expectations. All right. In the PPI as well, the producer price index came out as expected, and Empire State Manufacturing Survey was in line with expectations. So we don't have any news that are way off base that could impact the market. It's pretty much status quo as is on all news and economic indicators that were released this morning. All right, what you got to look forward to today is industrial production numbers came out at 9:15. I haven't had a look at them yet. Bloomberg Consumer Comfort Index, 9:45 a.m. Not a massive market mover and shaker, but something you should keep your eyes on as a trader. 10:30, we have natural gas inventory. That's a big number. It moves the natural gas futures significantly, and that volatility is tradable, and you can capitalize on that opportunity. We're going to trade it together in the room at 10:30 a.m. Eastern. So I encourage you guys to sign up, give it a shot. It's a 14-day money-back trial, so you have nothing to risk, nothing to lose. That's the only time you're going to get that type of advantage in any market-related service. All right. That's what we got at 10:30. Then we have nothing else. The coast is clear. At 4 p.m. we have Treasury International Capital report, and 4:30 we got a money supply report and a balance sheet. So that's after the bell. I won't be around to see those numbers. All right. So index futures. Let me just get back to Europe. I didn't really talk about Europe yet. European markets are up 0.5%. Paris is up 1.4%, and Frankfurt's up 0.7%. So strength in Asia, strength in Europe. But I'll tell you this, the rally from last night seemed to slow down overnight. In the European session, it's been a little bit more quiet, and that's welcome to a lot of traders. We had a lot of volatility. So the way volatility works, it comes out, you get a massive move, and then it slows down, takes a while, takes a breather, and then volatility comes back in. So it's not a constant pressure type thing. It's pressure on, off, and then back on. That's how markets will typically move. So look out. Despite this rally, I'm still undertone. It's still a little bit of a bearish feel to this. But the bulls are making a case. In the United States, Dow Jones is up a whole percentage point overnight. S&P is up 0.7, Nasdaq's up 0.7 as well. and crude oil futures are flat. They're taking a little bit of a break as gold is down 0.2% after an enormous rally yesterday. All right, Bitcoin's up 1% as well to 9,500 bucks. A lot of the strength in equities, the strength in oil, strength in gold came on the back of a really weak US dollar. This increasing debt, this large degree of spending from the government in hopes of spurring economic activity has a cost, and that cost is a devaluation of the US dollar. There's a loss of confidence globally in the US dollar, first of all, as a mechanism of global trade, second of all, as it being the reserve currency. All right, anywhere right now in the world where you want to do trade, it's done in US dollars, and there's starting to be a loss of confidence in that, which could be a problem, which is a big problem in the long term. It's not a tradable opportunity today, but there's a big problem in that loss of confidence in the longer term outlook of equity markets. So be cautious. The US dollar is something that should be front and center in your trading screen these days. It's very active, it's very symbolic, and also it's very correlation type market that impacts equities and commodities. So keep an eye out on the dollar. It's getting weak. It's down near the lows of 2018, and if it breaks that low, that's going to be a huge amount of sell stops getting triggered, and it's going to push gold up higher. It's going to push equities up higher. So keep an eye out on that. Yields, here's the interesting thing. Bond yields are up to 2.93% on the 10-year treasury yield. That's up 2 basis points. The yields continue to increase. Why are the bond yields increasing? They're going up because of expectation of higher interest rates. We had a really good number. Inflation-wise, it wasn't a good number, but it was a high number yesterday, and that was bad for stocks, but they shrugged it off. I don't think the impact of this really high inflation number that we saw yesterday has settled into the market yet. There was a knee-jerk reaction to go lower. We rebounded. But in the medium term, I don't think it's priced in. This high inflation number means more interest rate raises from the Federal Reserve faster, which means more hawkish. More hawkish sentiment drives bond yields up and pushes the bond prices lower. So I think that trend is still intact. You got to be careful. You got to watch this thing very closely. If there's 2 things to watch in the market these days, number 1, it's bond yields on the 10-year treasury note in the US, and number 2, it's the US dollar. These are things you really have to keep an eye out on. All right. Let's talk about stock index futures. So Dow Jones is up 1.5%, 1.1% to 25,124, as we talked about, up 262 points. But a lot of analysts are cautioning that this consumer price increase, which is inflation, could lead to more volatility in the near future. So be cautious. And with the government bond yield hitting that level, there's more trouble to come. I'm telling you, the sell-off's not over. Right now, we're in an uptick, but the selling isn't done yet. It hasn't been subdued. One thing I've noticed, and this is very indicative of the sentiment from the professional investors, institutional money managers, and the big money, the smart money as they're called, is this. We're going up in this market. We're rebounding, but the volumes are very weak. All right. Weak volumes on an upside rally means there's a likelihood of a reversal of that trend. The reason being, think about a car. If you're coasting your car and you have your foot on the gas pedal, you can expect the car to continue going at this pace. But if you're driving your car and you let go of the gas pedal, what happens? The car's still moving forward, but it's decelerating as it moves forward. Volume on a chart is the gas pedal on a vehicle. That the weight of it will stop it eventually if you're not sustaining pressure on the gas pedal. And especially if you're going up a hill, you're going to lose momentum much quicker. Ride the momentum, but be cautious because this momentum is not coming on a heavy gas pedal being pressed. Donald Trump last night or yesterday is calling for a 25-cent hike to the federal gas tax. There hasn't been a hike since 1993, which was the Clinton era, the Clinton administration. And the current levy at the moment is 18.4 cents a gallon on the retail gasoline. So that's about a 7%, not 7%, 7 cent increase. That's a big deal of an increase for consumers to shoulder. I was in the United States 2 days ago. I was in Los Angeles and gas prices were high. I looked at that and I said, wow. I mean, yeah, it's per gallon, not per liter, but even still gas prices were high. And now there's going to be an increase on the tax, which could push back demand for gasoline. I believe that a 7% increase of tax on gasoline will lead to lower demand for it, which means over time, lower demand, equal level of supply, lower prices in the gas or in the oil futures. Not today, not tomorrow, but when this is implemented, longer term, there could be an impact to the consumption and demand for oil and gasoline. All right. That's what I wanted to say on that. That's an interesting way to pay for the infrastructure plan. I will tell you this. You can't continue to spend money recklessly and expect to not have to pay for it. You will have to pay for it at some point, one way or another. So this is actually a good way to start thinking. Maybe it's not the gas tax, but maybe it's something else. You have to take from something in order to give. Otherwise, you're just going to increase and balloon out your debt, which is what's been happening in the United States. And a lot of debt holders like Japan, China, Saudi Arabia are no longer buying treasuries in the same degree or level extent as they used to, especially with the loss of confidence in the US dollar. So there's seismic shifts going on in the landscape of the economy. You have to know about this as a trader longer term, and also you apply that to your sentiment for the shorter term. All right. Last thing I want to talk about today is the gun stocks. I'm going to tell you this. This is a little bit of a controversial topic. I'm not taking sides. I just want to give you guys my 2 cents on it. It's not 7 cents like the gas tax, but it's my 2 cents. Based on research that I've done, there's been 18 high school shootings, or school shootings, not high school particularly, 18 school shootings in the United States in 2018 alone. All right. This is a place where you send your children to learn. If I was a parent, and I will be at some point in the near future, family planning is on my agenda for 2018, that would make me very uncomfortable. That would make me sick to my stomach. It makes me sick to my stomach now because it's your children that are out there, and I care about you guys and your children as much as I care about myself. All right, so here's what I'm going to tell you. A lot of these shooting scenarios, if you look at the background to it and who the kids were, they were on a lot of, how do we say this? A lot of hard drugs, like, and not in terms of street drugs, prescription drugs that were given to them that were signed off by the system. That's what's driving a lot of this. You can't say, on this argument, I'm neutral, I'm impartial. I don't think taking guns away is the right solution, but I don't think selling AR-15s at convenience stores is the right solution either, which probably doesn't happen. But what I'm saying is there's an undertone to this discussion that we're not having that we need to start having. And it's not about the guns. The guns is missing the point. Guns don't shoot themselves. The people behind the trigger are the ones responsible for the shooting. And I really think there's more to it. A lot of these kids, I pulled up the stats on the shootings, and I'm going to publish it on our blog at some point today, it's ridiculous. They were all under the influence of heavy mind-altering drugs. The kids who actually survived some of the shooting that were the shooters, some of them said, I have no recollection of what happened. All right, that's sad. It's sad. Look, it's sad for what happens, but it's also sad for the person doing it. Think about what you have to feel and experience to be driven to that kind of escape. It's not a simple discussion. I don't want to get involved. I'm not saying it's right or wrong. What I'm saying is it's time to have a larger scale discussion. And you don't expect to hear this on a morning trading update, but I think it's time. That being said, the preface, some of the stocks that are going up this morning are the gun stocks because the expectation is there's going to be a ban on firearms, pop the stock prices higher because there's going to be more sales for people who want to create their stash before the ban goes in. I don't think a ban's going to happen. However, here's the stocks that are up. AOBC is up 2%. Ruger is up 4%. RGR and OLN, which is up 2.4% as well. So before I gave you the stock symbols that are profiting from this, I wanted to give you my opinion on it because I feel I owe it to you. All right, guys, have yourselves a good trading morning. I got to get in here and open up the trading room. Be cautious today. Manage your risk. I'm sensing some bullishness in the market, but today could be a reversal day. So be bullish on the open, but don't be biased. Be ready to flip around and take the short side if you see selling overwhelm buying. How do you decide that? Watch your order flow. Watch your indicators. Watch Delta. Watch things that you don't even know exist. Join TRADEPRO Academy, by the way. Our futures course will teach you things you never knew existed about trading because they actually work. There's a small percentage of the crowd trading profitably, and they're not looking at head and shoulders shampoo patterns. They're looking at the inner workings of the actual market. If you're looking at candlesticks, great. You have a candlestick, but how did that candlestick form? You have to dig deeper and look at the order flow and how it was established. That's it. George, over and out. Remember Obama? He said Obama out, George out. You guys have a good day. All the best to you guys. Good luck trading. Manage your risk. Trade like a trade pro. And I encourage you guys to come out and check out our trading room. You won't regret it. And if you do, you got a 14-day guarantee. You guys take care. Have a great day. I'll see you tomorrow morning, 9 a.m. It's Friday. We're getting closer to the weekend. And yeah, enjoy your day. Good luck. I'll see you tomorrow. Goodbye, and thanks for tuning in. See you later, guys. All right, trade pros, let's get started. Let's map out some levels. I hear a lot of chat room chatter going. That's good. Spark the debate.